Ah, we are live. We are live now. So then I'm going to record this. So if you do not be able to attend this thing, you now watch from there. Okay, let me. All right, let's go. I hope you can see my full screen.
Yeah, yeah, yeah.
Yeah. So there's one thing I will just hasten up this lecture because we don't have enough time so that I go do and make everybody go do wetin im get for this night. So there's one thing I want
Wow.
some of us to understand in terms of trading. Trading, the first thing I need to tell you is that trading goes with patience a lot. So you will not you will not you will not do well if you are not the kind of person that always exercise patience, because that is the major thing. And another thing is that in terms of your analysis, you don't have to be stingy in any time frame or be stingy with your time frame. You have to go any time frame you want to go. You must go and try to find one or two things that is happening in that time frame or each of the time frame that you want to use. So, and again, if you want to use time frame, if you want to start with your time frame, I prefer, because that is the one I used to do very well, start with higher time frame. So today we are going to analyze gold first before any other pairs. So if you are trading any other types of pair, then you can still tell me to analyze the types of pair that you trade, because it's not must that you will trade gold. You get. So you can trade any pair, any of your choice. You can trade it. Despite, and I also tried and also want to tell you that if you are a beginner, try to just start with one pair. The same structure, the same trend, the same thing happen in all of them. But if you now start to learn many pair, you will be convinced, like you start thinking that it's not the same thing that happened in all of them. The same thing happens in all of them. So you need to start with one, and whenever you start with one, be able to document some things that used to happen in that one. So you will understand that whenever you learn, if you don't learn finish, let me just use this language. If you don't learn finish, you understand that is this thing is just the same thing in every pair, whether gold or GU or EU, anything. The difference will be on the volatility, because gold is more volatile than other pairs. So, but the same types of analysis, the same type of analysis, the same type of entry, all of them always present the same thing. So, if you know it very well, you will now know that yes, that this thing they used to work the same thing. So I advise you guys to use one pay and be learning if you are the type of person that is learning, or you if you are now a professional trader, you can now be looking for opportunity for many or several pairs, something like that. So now I hope you guys can hear me. I hope you guys still hear me, ba?
Yes, sir, we can hear you.
Yes, sir, we can
Okay,
hear you.
okay. All right.
We can hear
So
you.
let's start now. So the first thing I'm going to do, just be watching the way I will be analyzing so that you will learn something. The first thing I'm going to do is that I will forget all these time frame because some of you guys would go and start your analysis from this time frame, smaller time frame. No, it's not the best. And if you look at my, I don't change anything. So if you want to learn, you start from the way I arrange my time frame. I don't change, and that is what I've been using, and what I've been using to make all those money that you used to see. So I don't change time frame. If you look at how many time frame I'm using, unless if I want to now add position, sometimes I go to lower time frame like 5 minutes, 15 minutes. That one is when my trade is now running. So now, if I want to start my analysis, this is more like um teaching class or lecturing class, not, I don't want to start saying okay, let's go to higher time frame all this. So I will start it the way I want everybody to understand and also follow up. So now if I want to start my analysis, I will always go start from the higher time frame because the higher time frame is the one that will tell you the overall things that is happening in the market. Yeah, and if I switch to my higher time frame, you will now know what is happening in the market. So now, if I start from 1 week because I know majority of us here is we are day trader, ba. So a day trader, your time frame start from 1 week. Does not mean that you will start your entering in that 1 week, but first of all, get the overall move or flow of the market. So that's why I will start from this higher time frame. So in higher time frame, and then again, you any time frame you enter, be able to interpret what is going on that time frame before you now switch to another time frame. You get, at least, even if you say okay, this time frame is breaking high, then you will not you've done something there. Then you now switch to another time frame. Try to also know what is going on that time frame too. So this time frame, we are uptrend. You know that, bar. And I would like everybody to follow up. We are
Yeah,
uptrending.
yeah.
Yes.
Yes, sir.
And again, know that higher time frame is the one that overrule all the smaller time frame. Like this 1 week is stronger than what? 1 day. This 1 day is stronger than 4 hours. 4 hours is stronger than 1 hour, and 1 hour is stronger than all this lower time frame. So now we are in uptrend in what? 1 week. That means since we are in uptrend in 1 week, we expect price to close bullish before Friday or after next week. Like as we are entering today, we are in new week back. So we expect price to close bullish before Friday next week. You get the Friday this week, I mean to say. So that's what we expect. So that is number one thing you need to know, that uh and before next weekend, we expect price to close what? Bullish, because we are in what? Bullish trend. So then after that, you will now check your level, where as we expect price to close bullish, where do we need to what? Enter. Because we cannot just wake up and enter in any place, and because we think that price will close bullish. So we cannot just wake up and enter in any random place. You now be marking your zone where you will enter. Assuming you want to use this 1 week as your entering, where do you think you will enter? Because first, you've already known that price is what? Bullish in this 1 week. There's nothing you are going to think about again rather than buying. You get, because since price is bullish, you will continue to what? To buy. You don't want to be selling in a bullish trend. You get. So now, and again, one thing will always come in your mind, and that thing is that In a bullish trend, you always like to buy in what? In any impulse that goes down, which is any dip. I hope everyone understand this thing. Do you understand this thing I just said now? Hmm?
Yeah.
Yes. So in a bullish trend, always
Okay.
plan to buy in
At the
like
support.
to buy in dip, not up.
That's
So
at the support.
yes, at the support. Just take it this way. Buy deep in what? Bullish trend. Then buy any rally. Okay, sell any rally in what? Bearish trend. So
Very
you
strong.
have to, yes, you have to now put this thing in your mind. So now, if you want to buy, where are those areas that you need to buy? You will now start marking it. That is the first thing. Like, you know what is price action? Price action is all about looking at your chart, identifying what the market is trying to do. It's not all about trying to pick your tools and start marking something. So, but if you have already identified where the market is moving to, where are you going to buy is next question. So you will now be using your tools to mark out where you're supposed to buy whenever the market come back to that zone, because this is bullish. You expect market to continue up. Then you will now be using your tools to mark your support level. So if you want to start, okay, if you want to start your analysis, you need to put some things in check, like to count, to keep some things that you are going to do, which is, if you are using your higher time frame, which is number one thing, then you'll be considering your trend. You'll be also considering your F and R zone. I know all of you know about F and R zone. I use that sometimes. Like I use it steady to mark all these things I'm telling you now. So you consider your F and R zone, then you also consider some of your, like, as we go, I will be telling you guys, which is your trend. I've already identified that this is what bullish trend. Then, and we are going to consider to the market is going to buy this week, because we are in what? Bullish trend. We expect the next candle to close what? Bullish. You get? So where am I going to enter? If next candle is closing, if next candle is going to close bullish, where am I going to enter the market? I'm going to enter in any a deep, like any deep I see, I will enter that deep. I will enter buy, not sell. I will enter buy. You get? So now, where am I going to enter? You mark those zones that you are going to enter, which is this. I'm going to use F and R zone to, like, I'm going to use F and R zone, which is this one. This one is example of F and R zone, because the candle, we have considered that this candle has already closed, because if market open, the candle will close, and the candle will not move again, except new candle will now open to start the week. Then this is your F and R zone. First, you that is your number one thing, because if market now turn to break this zone, we are no more bullish again. We are now what? Bearish. I hope you understand. I
Yes,
hope you
please. We
understand.
understand. Yes, we are following.
Okay. So now, if by the time that the market will open, and we see deep to this side, we'll be expecting to buy from here. You get? Then we expect the price to close with bullish, which is which simply means that we are still what? In bullish. You get? Then next thing is that if there is any way that the market tends to close, to break below this level and trade below this level we will not be what? Expecting bullish again. We will be expecting price to come to this zone before we now think about selling again. Before we now think about buying again, you get. So that is it for this one. You can see the way I used to mark this my zone now. Then I said that this is my first F and R zone. You get, because the price this candle will close like this. Because we just assume that the candle has closed already. I will mark this zone as what, F and R zone, because the candle will not come and sell again because it has already closed. So, but by not, if you are the one making this noise, abeg mute your this thing. And if by Monday now we see price start trading below this zone and mark, that means we are expecting price to come to this zone, and this zone will be our second F and R zone, which is support level. So after you mark all this thing, what you will do again is to switch to your other time frame, which is 1 day. Then let's see what will happen in 1 day. Then in 1 day, you are seeing the kind of market structure that is going on. What is this type of market structure? You need to understand it. You still need to understand what Quasimo's principle is. The way you can, like, to understand the market structure of Quasimo's patterns of trading. You get. So if you understand the Quasimo pattern of trading, you should you're supposed to know your support level by now. You get, supposed to know your support level by now. So using F and R zone again, we can still mark. Already we know that in this 4 hour, in this 1 day now, we are still in what, bullish. We've not turned to what, we've not changed to bearish. You get. So we are still in bullish. Then where are we going to buy in this bullish market again? You should just consider it. Always consider, anytime you open your time frame, any time frame, consider where you the trend of the market, and also consider where you're going to buy or where you're going to sell in any trend that you see. So where are you going to buy here? You are going to buy at this zone. Another zone that you are going to buy, you are going to buy at this zone, because of what, Quasimo's principle, the way Quasimo's pattern moves. You get. So you are going to buy at this zone too. So in terms of your taking profit, you know that this by this time, you know that market will always go up, because you are in bullish trend in what, in 1 week and in 1 day. So where am I going to take my profit in case the market moves to my direction? Then you now mark it. You still mark it. If you check what I'm marking here, you know that I'm using F and R zone to market. Even though I'm using, sometimes I will tell you it's Quasimo's pattern or Quasimo's support. Quasimo's support is also F and R zone, but there's a way you, like, there's that one you always see it. You always see it as different thing, like different way. I don't know how to explain it, but I will still try my best to show you guys how Quasimo's principle always be like, if you don't know it before, like if you don't know it by now. So now, already we know that we are in bullish trend. That is number one thing to check, your trend is bullish. Then where are you supposed to buy? You've already marked out where you're supposed to buy. And I already told you that before you buy, you always make sure that price dips. Then you buy from the dip and be going up. So now this represents dips. You know that price have been bullish. So you're supposed to have been buying from here. But remember what I said, that you buy from deep. If you check now, you know that the market sold from here to here. That means this thing is now representing our deep, and this is the place we need to start buying. You get. So now, outside that, you also see your support level here, and this one is Quasimo's support level. I don't know if any of you know about Quasimo's. Quasmos. So this is Quasmos support level, and this is a place you will start looking for buy because you are still what in bullish. So we are not going to buy at this point now. We are going to buy in the lower time frame. So we make the analysis until we see the lower time frame. We now check the type of trend. We now check how many time frame that has bullish trend and how many time frame that has bearish trend. They will now compare and make our judgment to know the side we are going. So now we are now going to enter 4 hours because we've already marked our what our zones where we are going to what enter. So we are going to now um we are going to now enter the other time frame, which is 4 hours. So let's enter 4 hours so you can see the kind of thing I would like you to know. So now in 4 hours now, I just want somebody to tell me um something about these 4 hours, whether we are bearish or what bullish. Can anyone tell me if we are bullish or bearish in these 4 hours?
So for
I
me,
think
I'm
we
actually
are bearish.
bearish on the
Okay,
4 hours.
okay. You are bullish or bearish? Which one?
Yeah, bearish, but it's like a
Bearish.
short-term bearish trend.
Okay,
Yes.
okay. So, but you can see that we are actually bullish in these 4 hours. Do you know that? If you don't know, let me explain. Eh?
So why I said bearish was because
Okay,
that's the daily level you drew. Now on the 4 hours, the market came to reject the daily level and broke this neckline. So that's why I'm like, okay, momentarily we are bearish on the 4 hours up until probably the market trades into another daily level and there's another form of rejection of that daily level. So since this is like a recent reaction of the recent daily level and 4 hours I started giving some sort of like an internal kind of structure. So that's why I'm like considering the immediate price action. As I'm saying, okay, I'm kind of bearish on the 4 hours until price comes to like a daily level.
okay, okay. I really understand you very well now, but I want to still tell you something. In terms of trend, we have impulse and correction. When market is making correction, it does not mean that we are what bearish in a correction market. We are not bearish in a correction market. But when market, just use your eye and identify which one is the impulse and which one is the what correction. In terms of correction, we have different patterns of correction. We have a triangular correction. We have ABC correction. So if you don't know that the market is doing correction, you will not know when to enter the major move that will happen. So in my own, I will tell you that the market is what this 4 hours is what is a bullish, because if you look at this point, if you look at this point, this is the first bullish trend. This is the first bullish move, and this is the first impulse. This thing that happened here, this thing that happens here is a correction. Though I've stopped posting my this thing. If I know that someone, I think some of my classmates is here and they know that I got this move from here to here. Even when the market started moving all this thing from here to here, I caught the move very well. So I made a lot of, I will not say a lot of money, it's small money anyway. So now it's because I know that this place is a correction fix. This thing that is happening is a correction fix, that we are not yet in a downtrend. Uh, then I also know when the correction ended. So now, from this place now, if you look at move here, you also know that this is a correction. This is the impulse. If you see the way the market moves away from the place, like from the support level here, see the market just move without anything holding it. But if you see the way correction happen, correction keeps on going, breaking, you will be seeing more of what? Green candle. But in the impulse side, you'll be seeing more of the red, the more of the green candle, without you will see less red candle. Like if you check the impulse from here to here, you will see it's only two what? Two red. But if you see the correction here, you'll be seeing green, more than five green is there. So, and again, we have been trading high. And also I told you that use your higher time frame use your higher time frame to judge even the one that is closer to the time frame that is closer to that higher time frame. So you can still use your 1 day to judge your what? Your 4 hours, because in your 4 hours might be like your 4 hours fit be bullish. You may not know, but you'll be thinking that the retracement is what? A bearish. If you don't used to see it often, or you've not experienced this before, you'll be thinking that your 4 hours is bearish. You may not know that it's bullish. So in this thing that happens here, if you open in 1 hour, you will know that this is a correction phase. This is a correction phase, and this is our support level. This market may not reach this, break below this level again. It might come to this level, then to continue the impulse. So now we can say that this is what? Bullish. Let's just put it this way. Look at that, the impulse from here, the correction from here is deep. We have deep correction here. That's why you will see the market will go bullish and try to correct again and still want to go bullish. So then this place is a bearish phase, but is a correction phase. It's not that the market is trading what? Bearish. That's what you have to know when the market is trading bearish, and when you just want to see a correction in the market, or just when market just want to correct. So, and you also know that your higher time frame correction may be looking like a bearish in lower time frame. You get? So you should also look for a way to know when those ones wants to happen. So now, for here now, we see that the market has already break this level. You get? This our major level. Then market don't already take them out. So then we wait for the correction of the market from here to this zone for us to enter more bullish. So I'm still predicting bullish in this market. I'm still predicting bullish because many things is still looking bullish. The trend, even the trend is bullish. Even the trend is still bullish. So we are bullish in this 4 hours. Then when you go to your 1 hour, is your 1 hour that you will now be contemplating whether you are in bearish or bullish, which I will tell you that this from this phase here to this, let me use something and mark it. From this, let me use this. Oh God. I hope you are getting what I'm saying, but if you are not getting, still let me know, I beg. So that if you do not understand, you still let me know so that I will explain more. From here, in 1 hour, we were this place. From here to here, you see that the market was bearish. But now you can see that the market has already taken out this level here, showing that we are now what? Bullish. See that the market moved from here, bearish, then from here still bearish. Then now we now break above. showing that we are, this is like an in SMCT or in SMC, they will say this is an induce, that we bullish is being induced. So this place is showing you that we are about to continue our bullish. So we will be waiting for price to come below, then continue up. So I hope you guys are getting what I'm saying. Or if you're not getting, still let me know. Let me explain more. Can you guys hear me?
Sorry, this yeah, I can hear you. This current level price is rejecting off from this current level. That price is rejecting off from and leading to this break of structure in the 1 hour. Is it a daily or a 4 hour level?
Okay, this low, it mean this low that price is rejecting
And
from.
that, yeah, this level price is rejecting off from that led to the break of structure in the 1 hour. What level is that? Is it coming from the 4 hours or daily?
Okay, this low is coming from, you can still say it's 1 hour or 4 hours, because if you check 4 hours 4 hours support level, you know that this is support. Do you know that this is support? First, do you know that this is support?
Yes, yes.
Yeah,
Okay. So now, still, this support syncs with 1 hour support. This 4 hour support syncs with 1 hour support. You know that. So you may not really tell which of the time frame that is causing this move, this rejection here. Might be 4 hours or 1 hour, but since all of them same, they are just together. You get? Do you get now?
yeah, I get. So
So
from from your own conviction, you'll be
mm,
like, okay, at this point, this short term early bearish trend has shifted to like a bullish continuation, like to continue the higher time frame bullish trend.
yeah, you know that this is a correction phase, but as I said
Yes,
before,
yes.
this is a correction phase. Always try to identify your correction phase. Not that is the some of my students. That is how they used to like do it. Like they will now try to identify your impulse and your correction phase, because that is the major thing. In your correction phase, if you don't want to sell, it's fine. Some people will try to to still enter in that correction phase based on if the correction has like if the correction has um bring some trend like structure. You get, like for example, now you see that this correction is now trending like what a bearish trend. If you like, if you want, you can be able to get in and still go out very soon, because the major move is the bullish side. You get, so try to know where your correction starts, and to know the kind of correction. I told you that we have some types of correction. There's a way we have ABC. We have flat correction, which is normal consolidation. Then we have a pattern like triangle, channel, all those things. You get, so you really need to get to know when that correction, the one that the correction is like. If you know the type of correction that is happening in that particular market, you will know when the correction will end. Like from this one, if you ask me, I will tell you this is a word, ABC correction. You may not really understand it very well if I explain it, because you don't know some of the Elliott wave. Except you know Elliott wave pattern, you will now know that this is ABC correction. And I will tell you the correction ends here. You get, I'll tell you that the correction ends here, because the market has already break this level. Not alone, not just that the market has break, that the market has taken out this level. It's not only that thing that will tell me that this place, this correction has end, because sometimes market will take out some level like this and still sell. You get, sometimes This one used to happen every time. Like market will come like this, bring this thing and come and take out this level and still break it inside and retest it and still sell. You get some types of this type of trend always happen. You get this type of trend always, and this is a normal trend that you will see in the market, not all those trend that they used to show you. Like some people will tell you market will be moving this way. There's no market that will be moving this way for you, because if they are moving this way, you'll be making enough money. Like you will be making money, because anytime market moves, when they correct, you now buy. Anytime market moves, when they correct, you now buy. But this is the pure structure that market used to take. You will see market will be moving this way. Let me just something like this. They will never give you a good structure. That's where SMC bring the structure pattern. They will tell you this is what, whether inducement or what. Before, I don't know what they used to call it, but this is the normal structure of market. Market will never move this way for you. Like it will never move. Even if it is moving, you will see all this ABC correction. All this ABC correction will be distracting you if you don't know. You'll be thinking that market will move straight. If they even give you this type of move, it is even understandable. If some people give you this type of move, it will be easily understanding. You get, but they can never give you. They will always draw this thing for you, because it will be very hard for you to identify what is going on here and know when this thing will end. Mm? And know when this thing will end. And some people will give you this one because every time you see this type of correction, if you pay attention in the market, you always see this type of correction before any impulse. Even in a correction, you will still be seeing this type of correction before any impulse that leads to that correction. You get. So like for example, like this. Let me remove this. For example, you will be seeing something like this. The market will move, correct, and still break above. You'll be thinking this is what, uptrend, that the market has changed to what, bullish, but you can still see sell. You get. This type of correction always happen in the market, and that's why I said, when you really understand what you are doing, you will be buying at an impulse, and also you will be selling at an impulse, and also buying, and also sell, and also buy at what, a knee deep. Like for example now, if you look at this zone, if you see what happened here, that market moved up, then before it activates this sell to this level. So if you see this kind of move and you start seeing the candle closing below, you know that this move supposed to break above this level, but it fails to break. If any market fail to break a higher high, that means the market is coming to break the lower low. You get. I hope you get what I'm trying to say. Anything you know, anything that seems like it did not clear you, still tell me. I will
Please,
explain it more.
please,
Yeah.
can you come again on this one? I didn't really catch up with it.
I said that I don't know the side you did not get. Which one? Is it the place I
The
said
last,
if market fell?
yes, please, yes, please.
Okay. So I said that if market fell to break, if market is creating higher high, you know that, let me use this thing. If market is creating high and also breaking the high, creating a high and also breaking the high, you expect market to continue doing this. That is what we expect, and that is what markets should continue doing. If the market wants to keep trending. But anytime you start seeing market break high and fail to break this one and start coming down from here, expect markets to break this low. That's why I said, if markets fail to break higher high, expect the market to break what, lower. That means to break lower low. That means to create another lower low. You get. I hope you understand it now.
Yes, please. I get it.
Okay. For example, let me use this place for example because you can see it here. Let me use this correction fix the correction that happens here. You see that the market pushed up. We expect the return of this market to what? Break below this level. But since the market started pulling up from here, fell to come here, that's why you can see that the market break above this level later. But if you know that this is a correction, you will not fall into this trap. You get? I hope you get.
Yes, please. Yeah, I get that.
Then again, if you see that the market, you can see that the market moved down to this level and create this one. You get? We expect
Yeah,
that the market should what? If it is coming down, it should break this low. Anytime you start seeing the market pulling up again, you know that the market is coming to take the high of this one. If you look at here, you can still see this. You get? Then
yeah,
if the market pushed down and started pulling up, we expect the market to continue breaking this high. Anytime you see that market fails to break that high, know that it's coming down to what? To break the low. That's how you be that's how you used to what? Escape all this some stop loss that you might have maybe you you get without knowing. Because people will be thinking that okay, since the market failed to like the market is coming back to their zone for them to continue to enter. You don't know that the market is coming back to that zone for you to what? Enter for it to take your stop loss. So you get to look. You need to understand that anytime the market fails, if market is trending and it fails to break high or low, know that it's coming to what? It's coming to break anyone. Like if it fails to break high here, like this market start pulling up here. If it failed to break this high, know that it's coming to break below, to break low. So if the market fail to break high again, it's coming to break below the support level. You get. So people will be thinking that the market is coming back for them to buy from here, but you don't know that once you get in here, it will take your stop loss. Okay, look at here. This market went up. We expect it to continue going up. Okay, we expect the reversal of the market to continue going down. Because if you are looking at this trend line here, this trend here, you will be thinking that this trend is what? Bearish. You get? Then
yeah,
the market decided to revise from here. Even when you bring this thing now, you'll be thinking, yeah, I want to sell from here because the market has already given me the market has come back to my what? To my resistance. Okay, I want to sell from here. But you don't know that the market is planning to continue up because it fails to come and break below. That's why you see this market to continue up this way. If you look at this level now, as the market has already taken out this level, it's supposed to take out this level too without what coming down. But any factor that caused the market to start going down is coming to break below. You get something that happens here is this if you check this minor trend here, you can see that the market is the market supposed to come and break below this zone, but failed to break. You can see that it started moving again to a point here to show you that this is the correction market. It started going down again, and this one leads to break of this structure now. You get. So now at this point, the market has already taken this level. That does not mean that the market will not come and still take out this level if it decides to come, because nobody will predict 100% of what is going to happen. But if this market continue going down, at this point, we started printing a bullish candle again. Know that the market will not take this low again. That is coming to take this high. That's where you can get this bullish trend continuing up. You get. So, but for now, we say that yes, we are still going to continue bullish, but you are not going to enter. You still mark your zone where you think that market will come and you can see a change or a reversal, a bullish candle close. You still mark your zone. Like for example, now I will still mark some place like this. I'll be waiting for candle, or you use your fib to measure from here, because this is your beginning of the impulse, to measure from here. In your in first impulse, the retracement is always 0.5, 0.6 in fib level, and 0.7. You get. So now, in any of the zones, if you start seeing engulfment pattern or dodgy candle, you should know that the market wants to revise. That is my entering. I'm just opening up for everybody here. So just learn all these things. It's not hard. Just you need to just know all these small things. It's not hard. You get. So if the as the market has moved from this support level here, we expect, and it has already taken out this high here. We expect a reversal. So in a reversal, you should not rush and go and enter the market like that because you are expecting a reversal. No, you wait for the market to still correct itself. You wait from that place that the market ends. You still wait for a dip to enter. And where are you going to wait? You still mark your zones where you will be waiting for that dip. You know that zones, if the market tend to break that zone, you will not get any other thing than to change your bias. Then at this zone now and zone, this zone and this zone here, I'll be waiting. Maybe if the market from here come to this zone or this zone, I should be taking. If the market form bullish candle and close bullish, I should be taking my buy, because I know that the market did not take below this level. That means I'm expecting the market to take this high. I hope you are getting it, Ba. Are you guys getting it?
Yes, we are following.
Yes. You know that we are already in 1 hour time frame. You get, we're already in 1 hour time frame. And again, I want you to know that 1 hour is the only time frame that correlates with smaller time frame. 1 hour, it links higher time frame and what, a smaller time frame. So anything you are going to do, make sure you use your 1 hour to identify it first. If you are going to buy, make sure that your 1 hour close bullish. Make sure, no, don't use your 30 minutes and 15 minutes to start buying. No, make sure that your 1 hour close bullish. If your 1 hour just close bullish, what you will do again is to go to your 15 minutes to get your support level, and get your SL. You get, once you go to your 15 minutes or 30 minutes, you will get a minor support level. Then you get your what, your SL. Know where you place your SL. Then once the market go retrace back to that your minor support level, you can easily take your trade and go. But if you forget your 1 hour and you go like, for example, you open your 4 hours, you know what is going on in your 4 hours already, then you now ignore your 1 hour and go to 15 minutes and want to take your trade without checking your 1 hour, without checking whether your 1 hour close bullish or bearish, you will miss it. That 1 hour can easily remove you, because 1 hour needs to close bullish first. It is only time frame that is close to your type of trade you trade, which is day trade. You cannot be waiting using your 4 hours is closed, but waiting for 4 hours before you enter market. The market will leave you go without and when you enter, you feel be that time you want retrace. And the distance 4 hours candle can cover. You will enter, you will not be able to place your stop loss. You get. So it's 1 hour that link between higher time frame and smaller time frame. So you pay attention to 1 hour first. Anything 1 hour, they show you and waiting you will follow. And again, always enter market that is moving, not market that is going down. Like for example, you are expecting bullish, like the way we are expecting bullish in this market now. You will now be you as market is going down like this, you will now be entering. It doesn't make sense, because if you are entering when market is going down, that means because market that is selling, you don't know where it will end. You get, you don't know where it ends. It's better you are entering sell when market is going bearish, or when the candle is going bearish, than you are entering bullish when the candle is going bearish, or you are entering sell when the candle is going bullish. You get? So once your 1 hour start forming bullish candle, you are expecting that your analysis says that the market wants to go bullish, you start entering your bullish, because some mistakes, because you don't know where maybe the place you are going to place your stop loss, that is the place that bearish want to reach. Then you will now be going to what, enter what the market is going bearish for bullish. If he stop you out before any other thing, any other bullish, maybe by that time he will stop you out and turn bullish. You will start regretting, say you predicted it, and the market take you out of the market. Mm. So you follow the direction that the market is trying to tell you. That is, like, if you analyze, you know your direction, because before you finish analysis, you will know your direction. And once you know your direction, you expect a candle to close, to start the direction for you first before you start doing something. Even if you enter when candle has closed and the candle turns to start going bearish, if you see 70 to 80%, the candle will keep on telling you, I want to go bearish, I want to go bearish, I want to go bearish, because it will try to correct that bullish candle that it has already make before it will now go the bearish. For example, now, if you look at this zone, if you are in bullish from this zone, from this place, you will see that how many candle closed. Let me zoom it. How many candle closed, giving you signal that they want to go bearish. If you see first candle close red and it's showing you this kind of candlestick, and you ignored it, assuming you entered here and you ignored it, then the second one closed like this and you ignored it, that means you don't really know what is going on in the market. Yeah. Because first, you know that this is your resistance level. First, you know that this is your resistance level, and you are entering what, a buy from there, because of assuming, say you see something like that, the market failed to break below, then you now enter this thing according to what I just said now. Then you now be seeing this. The market is telling you, oh, I want to go what, bearish. I want to go bearish with these two candles, and you are still inside the market. You know that you really don't pay attention to the market. Mm. So, but if this two candle will close like this, you supposed to have move out, or even, okay, you now notice that market is telling me that you want to go bearish because this is a resistance level, and market has moved to this level, and this is a correction phase. Then I should enter for sale. You enter for sale, something like that. So this is where you end. Next time frame is the time frame that you use to enter your market, to make your entry. If you want to enter, to make your entry is the time frame, because all these ones will confuse you if you want to read their trend. But if you read your trend and end in 1 hour, 1 hour will filter some noise in the market. Uh, but because of 15 minutes is 15 minutes will close on time and still give you short support level, okay, short SL. You think that the 15 minutes is the best. The 15 minutes is and 30 minutes is not the best. They can easily manipulate. But these ones, they are very, very hard to manipulate, because once they start going, if you check here, you see that the market keep pushing up small, 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 small. But if you look at this place here, you understand what I just said now. That if market fell to close above, if the market fell to close above and start printing a bearish, that means all this thing I'm saying now is you can still use candlestick to identify it. For example, now, if you look at this, you see that the market pushed up from here to here. Then this bearish is the low. Then this bullish candle is supposed to close above this high here. Even if the bullish candle will close here, another candle will open and go up and still close. But once another candle starts showing what? Bearish this way now, it's not telling you that I'm not interested in going up again. I want to go down. So you should now understand what is in the market. For example, look at this. Look at this level, this small move that you're seeing here. You see that the market move correct, move again, correct again, and close above it, still close green, and still move again. That means it has it has broken, like it has broke the the high that this small candle created here, this red candle created here. Yeah. Then before another low come up, then the market take out the high. Then before another one come up, then the market take out the high. That's how the market is supposed to be moving. But at this point, you see that the market creates high, then low, then fails to break that high once the next candle started. It fails to break the high. That's why you see that the market can change and start going down. So if this market, this thing now that happened here now, we regard it as one impulse. We regard it as one impulse, and we like this is one impulse, and this is one. This is now the correction. As the market is correcting now. So if the market now tend to come here, um, close green candle, you expect this green candle, because that green candle is the beginning of the what? The bullish part. So you expect the bullish part to break above this zone, except the market did not close green candle for here. It continue closing red until e break below. Then you know that next one that is coming is to retest on this support level, on this resistance level, then and continue down. But so far as the market will move until these zones here, any zones here, and close green, you expect the market to what? Continue and break level, except that the market moves this way, maybe this level, then close green this level and start moving, maybe reach this level and start printing red candle. That means it is the bearish part has set in. Then you know that the market is telling you, oh, I'm not going to continue again. You now know what to do. You need to go out from the market. You don't have to be stingy always. You need to go out from the market. But when the market do this and break above this level, then you don't really have to be panicking in any retracement. Once retracement is coming, you just know that retracement must come. Maybe the retracement will come to this zone and green candle will start again. You can easily add position because you know that it is coming to break above again. You continue. So that's the way you pick your entry. Your entry, always know that whenever, but I don't know how you guys will, because my eyes already will see everything when it is coming to happen. But because of that, no, it's because I used to practice every day in the market. I've seen so many of them, and all those things is repeating itself, and I keep on doing it the way I used to do it. Then, but if you don't used to come in the market every time, you may not be seeing it. Maybe the first time you see it, you'll be seeing it. Maybe it will be looking like that is your first time you're seeing it, but you know that that thing has been happening in the market, but you don't used to see it, or you don't pay attention to know that this this particular structure or this particular thing has been happening. So now, if you look at this level, if I start checking it, if I start going back now to show you, I will show you. If you look at this level, this is what happened. You can see that there's the market revised from here. You can see that the market continue moving up. So if you look at this level, and also this thing I told you now, that if market start fail to break and continue down, remember that you don't do it when you don't include the trend. Always make sure to include the trend, because if it not include the trend, it can take you out. That is it. It can take you out. So now, if I go back You can see it here. You can see it here. Market moved up. Then you'll be thinking that this is bearish, or market starts printing bullish that it wants to go up. You can see it. It's continuous up. So anytime you see correction, look at it here. It moves, then ends without breaking below. It continues up. Look at this place. You see that the market breaks below. Even if you want to check this level, you see that the market gave, like, the market told you, like, the market will always tell you that it's not going again. If you look at this, the market printed green. If you enter here, you see that the market will still come back and go again. For this candle to close like this, you know that the market is not going again, because as the market close bullish, it's supposed to continue. Nothing supposed to hold the market. It's supposed to continue. But if you start printing candle like this, you know that the market don't wants to go again. You get. If you look at this side now, the market failed to break below this level. You can see it. Once the impulse start, it will continue. If we still go and check other places, like, if you look at this side now, you see that the market break above this level. And if you check very well, you see that the market did not break below this level, even on this correction. That's why you see that the market break this up one. So now, this market that corrected from here to here, number one thing you're supposed to know, that you're supposed to put in your mind, is that if this market starts moving, that the market supposed to break above this level. But if you start seeing it printing red candle, that means the market fell, is like the market don't want to break again. You can see that the market continues selling down. Okay, let's still check another one so that you see it. If you look at this level now, you see it. If you look at this level too, you see it. The market moved up, then fell to come and break below. That is the thing that leads to what it's buy into that level, still this level. So now, your problem should be, how am I going to be identifying all these things? Like, how will I identify all of them? Like, how will I identify this kind of thing? How you will identify it, I'm not the one that will tell you, but continuous practicing, you will start identifying it. Every day you come to chat, you check and you look, then you always, like, it's not much that you'll be trading, but it's more that you'll be coming every day to check, because that will make you understand what market is doing. I'm telling you the truth, is the best way to make money, this market. But it will take you time, because something that will give you this kind of money will not allow you to learn it one day. Because if you learn it one day, that means everybody will be rich, and it's very difficult. It's something that you keep on coming. You will see the pattern. Say in technical analysis, they said is past history. You will use past history to identify the present one. It doesn't mean
Yeah.
that you start going back to go and check what is happening in past history, or what happened past in maybe 2020. Then you use it and come and be predicted. If you do that, the market will eat you. What this thing means is that, that head and shoulder pattern, they have tested it and trusted it, that head and shoulder pattern used to revise market. Then it should be in your head that head and shoulder pattern used to what revise market. Then anytime you see head and shoulder pattern, you know that head and shoulder pattern, they said head and shoulder pattern used to revise in the market, and I've seen it in previous chart. Then you should know that you start looking for a way to enter it. And you knowing head and shoulder pattern, that head and shoulder pattern used to revise market, is not enough. You go to the chart, and chart will tell you, this is how it will do, and it will not revise the market. And this is how it will do, it will not revise. So you need to pay attention in those entering, because every chart, like every pattern has its own entering model, the way you will enter. So that is it. Then if you check very well, if you check here now, why I'm saying that the market will go bullish, if you check, you see that I am also using that thing I'm telling you now, but in this part, I'm now using a collection of many charts to tell you. You get. I'm not using that thing I'm telling you now, but I'm not using a collection of many charts. I'm not regarding this place as one impulse. Then this one as another impulse. Then this one as closure, a closure of green candle because it has already break this level. I'm not regarding this move that happened here as a closure of green candle because it break this level. So now I'll now say, okay, because the candle has already closed this way, then that means we want to continue bullish. So if there is any way that candle continue making bullish, reach here and start like, let me close this. If there's any, if candle continue going like this, if the chart continue going like this and reach here and now break down like this, I will now know, okay, the candle did not take out this higher, our highest level here. That means we want to continue down again to this, to come and take this one. You get, to come and take this
Yeah.
one. That means the bearish will now start. So now I'm now using the the chart level now. I'm not using a candlestick alone. But remember what is happening in a candlestick. That is what the chart is telling you. Collection of this chart is telling you. But you know that if you want to represent it now, if you go to higher time frame, you see that all this thing that happens in this line here, all this thing that happen in this line here is one candle, and all this thing that happen in this line here is another candle. Maybe this one that happen here will be another candle closing this way. You get, like if I go to 1 day now, let me go to this 1 day. Okay, 4 hours. Okay, let me go to 1 day. Let me see whether this thing will represent in one candle. So you will see it. You can see it here. So that you know that is what I'm using. So now you can see that this thing that is happening here is an impulse. Then this one that is happening here is another impulse coming down. This thing is supposed to come and break below this zone. This is the starting of this impulse. It's supposed to come and break below this zone without closing this green candle here. So, but now this is now telling me this candle, that green candle that closed here, is now telling me that the market is failing to break this zone, is failing to come back to this zone. That means the market wants to go up again and break this level that it started the correction with. So if you check it this way, it means it all these things that you are seeing in chart you think is one kind big thing. It is one candle that is representing it. Even in if you go to higher, if you go to one, maybe 2 days, you will see all this thing that is happening here as one candle, something like that. But if you go to 1 week, you see all this thing that is happening here as one candle, something like that. So that is the thing. So you need to learn how to read those structure, and you still need to put it in candlestick so that you understand easily what is going on or what the market is trying to do. So I hope everyone is getting what I'm saying.
Yeah.
Yeah. So now, in terms of your entry, I've already told you what you need to put to consider first. In terms of your entry, you need to consider you need to consider your what 1 hour, because 1 hour is an intermediate time frame. So it connects your lower time frame and your higher time frame. I classify these 4 hours, 1 day, 1 week as higher time frame. Then from 30 minutes, 5 minutes, 15 minutes, 5 minutes, 1 minute is lower time frame. So 1 hour is the one standing between. Because what 1 hour will do in this gold, anything 1 hour do can easily correct even higher time frame, correct 4 hours or 1 day. If 1 hour start a trend, it can easily correct 4 hours, 1 day, sef. You get. But you always pay attention that your 1 day is the most powerful, or your higher time frame is the most powerful one. You get. So
Okay.
I don't know if any of you have question.
It's clear. I'm going to watch this video over and over and again.
So you need to watch it more again, because you really need to understand the concept of this thing is just like the way trend behave. You get. So, and first
Yeah.
of all, that is what you need to pay attention with. Like that is the first thing you need to consider in the market before taking any decision. You don't want to come to the market and jump in anywhere and start selling or buying. You need to know the flow of the market. Do you know the reason? Let me still put it in this way. Let me just regard all this thing as a one candle that is maybe this impulse. You see that the market is moving like this. Yeah. Just
Yeah.
regard it, put it in your head as one candle. When one candle is moving up, do you tend to what? Sell or continue buying?
You
Like,
have to continue buying.
yes. So if one candle is moving like this, just put it in your head that you don't know where this one candle will stop and guide all this trend like one candle. So any pullback you will enter to for the one candle to still close where it's rejected from. You get. So
Yeah.
maybe we consider this is an impulse candle. So you don't really you may not like to buy to sell when a candle is moving and you don't know where the candle is going to end. So consider trend like that. Forget all these wave things that used to happen here. That wave is showing you where to. Is giving that is the way that is market giving you um an opportunity to enter, like to enter your own your own trade. So just consider the trend as one candle. That one candle is moving. That's why if you see me, I will even as the trend is moving up, I will continue buying because I will regard every pullback like a candle rejection, a candle that
An, op-
rejected.
an
Then
opportunity to enter.
yes, and an opportunity to enter. So and when you see it, and I see if I go back and still see a candle closing green, or closing any kind of green, maybe dodgy or bullish engulfment, I will now enter because I know that the market wants to continue again. It's not that you will come and be telling me, okay, this is a bearish candle, all those things. Then you want to start selling when I need. Just regard this as a candle, a single candle, because I know you will never go and sell when a single candle is moving up and it has not closed. Regard it because if you still want to check it, you can still get 1 year a single candle. You know that.
Yeah.
And if 1 year candle is moving up, you don't go and start selling it. But it's because you come to smaller time frame, you think you want to sell it. You get because you don't know where the candle will close, and you know that the market is still moving. The candle is still moving. It will go as far as it wants to go. You get you don't really need to start selling a candle that you are seeing an import like you are seeing it. So remember that all this pullback is just a candle rejecting will continue again because in
So
your I know you've been
yeah,
seeing it that okay, I'm coming. I know you'll be seeing it that candle will always reject and still push up again. I know you used to see
yeah,
that. Uh-huh.
yeah. I see.
So
So
if you have question,
we should also always look out for which particular candle to close before we make our decision to enter for that buy
yes,
or sell. Which
yes.
candle? Is it 1 hour? Which 1 hour candle always?
Uh-huh. In that, it
Yeah,
will now depends on the kind of if you are looking. It's not only 1 hour candle. Eh? I said one
yeah,
hour is an intermediate time frame. It links major time frame and minor time frame. So now, for anything to happen, hmm, to happen, 1 hour will always tell you when to enter because that is what you are using. Because if after your analysis, you need a time frame to use and enter. You get.
yeah,
So now, in your major time frame, you go there to get your trend, the kind of pattern the market is showing you, and whether it's bullish pattern or bearish pattern, any other things. But in your 1 hour, you know that yes, this one, if it closes bullish, this one is now when you want to take your what, your entering
entry.
decision. Yes, your entry decision. Then if 1 hour close bullish, that means I want to continue. That one is when you've already decided that okay, I want to buy. If you now 1 hour now close bullish, you know that yes, I want to continue and buy. If 1 hour now close bearish, you wait till 1 hour close bullish. So if 1 hour close bullish, you can now enter lower time frame, any type of lower time frame you want to enter. to find a minor support level to get in. Some, like for me, sometimes I will not even wait for minor support level. If I check my stop loss and my stop loss is fine, I will not even wait for minor support level. I will even enter like that. But if I check my support level and my support level is high, yeah, then I need, okay, my I said if I check my what SL and my SL is high, I need to wait for that retracement to that minor level for me to enter. So your 1 hour, you just regard your 1 hour as your something that will judge your what entry, something that will help you in judging your entry. You guys,
Okay. Yeah.
like for example now, remember, we know that the market is bearish. I will not be jumping in when my 1 hour show like anytime 1 hour show bullish candle, when you are in what downtrend. I will not be jumping in when anytime 1 hour show bullish candle. I will wait for what an impulse, which is this type of impulse, which type this type of impulse and this type. Then once I wait for those impulse, then I will now check, ask myself where the market is supposed to, where the initial impulse, where the impulse that break the lower. Like for example, let me use this. If I want to enter this thing, I will not be checking, this is the origin of the impulse that break this low here. And I expect for this
Yeah.
market to continue going bullish. I expect this one that the market is placing from here to break this high. You get? If this thing did not
Yeah.
happen, break this high, that means I'm considering what sell. So though, because I already know that yeah, this is a downtrend market, I will not be what looking for market to break this high. What I will be looking is, I will not be looking for market to break this high. What I will be looking for is the distance that the market will go, and I will be satisfied that the market will sell from here. Even if I sell from that distance to where the market ends here, I will be satisfied that yes, I've already taken any profit. Not that in this kind of place now, I will be selling here. Why will I be selling when I see a support level here? Because anywhere market start rejecting and they can't do close in FRR zone, we classify that place as support zone. I hope you get this thing.
Yeah.
So if market end here and market close green as e close green here, we expect that this is a support level in F and R zone. You get? So
Yeah.
if another red start from here, I won't pay attention with this one because support level is close to it. It might not break that support level because green started here. For green to start here, that means green can easily start from here when the market come back to it. And I cannot hold because the risk to reward ratio is very, very small. I'll wait for market to what make an impulse, like a short impulse, or even I will call it retracement. I used to call it impulse for you to understand, not to come to just hold it like see if market will now retrace small, because this one is a retracement now. This small one is a retracement. If I call it a retracement, you'll be thinking is this small one. But if you see
Yeah.
this one to a new zone like this, and you start seeing a rejecting candle, a dodgy, all these things, you now say, okay, for this market to close red here, that means they sell, the sellers want to start, which this small red here. I can easily start to enter
Mm-hmm.
here and put your stop loss above. I can easily start to enter here and put my stop loss above. Then expect sales. You will see the sale will happen and you'll be seeing. Even if the sale will not happen, even when the sale will not happen, you will see small sale will happen. And you will be using your eye to see that this market did not let her break below. It wants to continue up. You can go out because not every time you see all those things that you expect the market to give you what you want, because nobody you they control them now. So sometimes you run away from the trouble. You expect other ones. But let me just say 80% of this kind of thing that I'm telling you, it works. I'm not telling you like sometimes I know if you have been trading with me, you know that some trade I used to enter, I don't enter it at maybe maybe on on support level like this. I will see that the market break the initial support, then I will rush and be entering. No, I know they enter like that. Like for example, here you see that the market break this small support level where we put here. You see that the market break it and close below. I will not enter this kind of trade. I will make sure that I have
Full
impulse.
break.
Yes, even if I will make sure that I have full break, maybe this break will happen like this. Then I will see that there is a rejection and the rejection is more than two or three candle. You get. Then I will now say, okay, yes, the rejection, like the pullback is the correction phase don't happen. Then any green candle, any red candle now, I'll know that the bearish wants to take the away. Then I will now be entering at that level. It's best you enter there because one is that you will see that the market will not move. Even if the market wants to move against you, it will not move again. It will not move in a higher way because the market don't move away from the support level. So it is now that place now will be acting as resistance to pull it down again in a bearish market. You get. But if you start entering close to the support level, know that buyers are still anywhere you go, buyers are there. Buyers are still trying to what push it up again, and they might win the sellers. Then it will stop you. Go for sometimes
Anything
to
anything
sell.
can
You say,
happen.
that is what I predicted. So you always allow your market to move away from the support level. If it is sell, if it is buy, you always allow your market to move away from resistance level. That's why I will always tell you the rule is buy deep. In a bullish trend, always buy deep. In a bearish trend, always buy sell high. So you now use your eye to judge which one is the high, which one is the what, the low or deep.
Yeah.
So that is it. So everything, not nobody will teach you everything in trade. You
Yes,
still
it's
need,
true. You
yes,
experience and
yes, you
and
still
and time with the chat. Yeah.
yes, you still need to use experience because if people used to teach you like if people teaches if people teach everything in the market, you see that anybody that go to maybe anybody that went to Habi Forest Academy would have been doing well. Maybe everybody will know that this one
Millionaires. Yeah.
everybody that went there will be doing good because they cannot give you what that in where they
Everything.
there that common sense where they there brain already there. Their own na to teach you wetin they learn again. Then you need to use your own common sense. And the common sense you need to use is all this thing I'm telling you. They can only teach you the candle move like this, candle move like because they will never teach you the common sense that you will use because that is the
It's
major
true.
thing. If people are telling you this is where you want the things to move before you can enter, you know that the person is doing good. Mm. You don't need to start entering when the market just break a support level because there is order there. There's no support level that they don't have order, and there's no resistance level that they don't have order. That's why you don't need to enter there. Even in your smaller time frame, always use your eye to check your minus resistance or support level, and never you enter there. Never you enter there. It's better you enter when the market break and retest and use it as what a support or break and use it as resistance. You now enter it. But when market don't move away, then come there they dance for you. No try am, no go enter there.
Hmm.
Just forget them. Wait, make you know
Allow it.
what you need.
Patience.
From that
Yeah.
is sell for you. Then you now start to enter down. You get.
Yeah.
Yeah. So if anyone have question, should just ask.
I think it's just both of us on the call now. I think the others have left.
I know I don't think so. People are still
Yeah.
yes. I think okay, we are just two.
Yeah.
You are Victor, ba?
Yes.
Okay, and Biggie. Victor and Biggie is here.
Okay.
So no problem. So you don't have any question, ba?
No, I'll just watch the video over and over again.
Okay. So if you watch the video over and over again, just still ask your question in the
That's it.
group. You
Okay.
get.
Okay.
All right. I want to end now.
Thank you so much, boss. Thank you.
All right. Thank
God,
you.
God bless you.
All right. Goodbye.
Good. Okay. Good night. Good night.